Well, I think we're running out of days of the week that can be black, actually. Certainly the turmoil that you are seeing today in markets, a continuation of market falls that we saw last week, is of systemic importance. You know, it's very clear that the Chinese authorities have not been able to successfully rebalance their economy. Part of the strategy in doing that was to effectively pump up or create a stock market boom in order to create a wealth effect. That has failed, and they failed to arrest the downturn. We've had about 70% of stocks in the Shanghai Composite overnight limit down at 10%.
This is a very, very difficult phase for the Chinese economy, not because of what's going on elsewhere in the world, but the rebalancing of the economy that they're trying to make away from a industrial manufacturing economy to one which is more consumer driven. They're doing exactly what every Western economy has done, but at a much faster pace.
We are an open market. Markets would rise, markets would fall. What we need to ensure is to make sure that the markets operate smoothly and in an orderly manner. That is our responsibility, and we will continue to do that.
There are many moving parts in the picture, basically. Bottom line is they will be aiming to stabilize sentiment where possible, and also it's not only sentiment in the equity market, but it's also credit growth. It's also making sure that infrastructure investment holds up so that it's strong enough to offset headwinds from the property structural downturn. So in juggling all those different pieces, trying to stabilize equity market sentiment is just one of a few important priorities, not the only one.
You're seeing concerns over the formation of an interim Greek government weighing on markets. Clearly, the commodity story and the potential for further falls in the price of oil and the disruptive impact that is having on some indebted countries is clearly playing also on markets. And put that together with a slowdown in activity in China, you've got an almost perfect storm of geopolitical events. But you have to weigh that up against the impact that falling commodity prices, particularly energy, will have on the developed economy, where actually that is passed on to consumers and into their pockets. So actually the medium-term prognosis for a lot of consumers, for investors, for firms is actually fairly good.